Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade. With our midday update, we're going to take a look at earnings season's trends and, of course, a couple of stocks that are reporting after the close today. Shawn, it's great to have you with us as always. And earnings season pointing to somewhat of a slowdown this year.
It is. And so going in, I'd say if you're looking, say, December 31st, before we really got into earnings season, they're expecting a slowdown of about 2% growth year over year. Right now, after getting sort of the first salvo of earnings out, we're looking at minus 2.1% earnings growth year over year. Now, what that does, where they get that is they say, look, everyone that has reported, we'll put those in the actual results, and then we're going to fill in the rest with the estimates. So that's why you want to track it and see where maybe some of these beats can come from. If you can get to start to see a little bit more of an upside surprise in some of these companies, then that could maybe drag us towards flat to maybe even positive earnings growth. But I think everyone got a little ahead of themselves last week with some of the financials of big banks having positive earnings, say, hey, could this drag us into positive territory? And when you look at everything else out there, it's still a little bit of an offsetting factor.
All right. You know what? They do have to have some beats out there because valuations are all-time highs. And you have to be able to justify that, right?
They do.
Well, let's take a look. We're going to have United Airlines. It's a Nasdaq 100 component reporting after the close today. Let's take a look at the chart that we have on United Continental. And with all the news that's happening with the coronavirus this afternoon, I'm sure people are going to be looking for commentary around that. But, you know, what are you hearing about what Thinkorswim clients are looking for going into earnings?
So we, at Thinkorswim, we actually have a proprietary method for kind of pricing in a post-earnings move using the options that are listed out there and traded. For something like United Airlines right now, we're looking at about a $4 move in either direction post-earnings. So it'll be interesting to see if, you know, how that plays out. But if you look at the implied volatility, which kind of is the fear uncertainty index for United Airlines, we're sort of butting up against those highs that we've seen over the past year. So it is showing some uncertainty. And you have to remember, not only do we now have, you know, what's coming out of Southeast Asia with the fears of the coronavirus, but you also have the slowdown in Hong Kong and China due to the protests for the past quarter. And then you also have the Boeing 737 issues. So there's actually a lot of interesting anecdotes I think you can take from this earnings call when you hear from management after their results to maybe get a feel for some pretty big events that are happening in markets right now, what management of a company that has exposure to all three of those, how they're viewing things.
All right, let's wrap it up with Netflix, because Netflix is always a popular name for retail investors, always makes the investor movement index that comes out monthly. What are you seeing here with the market maker move?
So right now the market maker move's pointing to about a $25 move in either direction post earnings, pretty big range, $50 range after earnings. They've had a lot of factors I think to look at. They've had some new competition coming into the space. They're wondering how that's going to impact their ability to add net subscribers, which they're looking for about 7.6 million new subscribers or net new subscribers over the past quarter, so that'll be an important metric to watch. But they've had some maybe offsetting factors because they did also raise prices over the last quarter. They're wondering what effect that's gonna have on their ability to add new subscribers. But they've had some pretty big successful movies. The Irishman and then El Camino both had about 25 million views in the first week that they had those out. They've also had The Witcher, which has had some pretty good initial results. So there's a lot here that I think could maybe offset some of the challenges that you've seen in the competitive space that could maybe help them hit that $7.6 million subscriber, but certainly going to be interesting to watch.
It's so interesting to go from, when you look at movies, how much they accumulated over a weekend. Now it's just by downloads and how many video views it has. So interesting to see how the streaming wars are changing the way we consume cinema. Shawn, great to have you with us as always. Thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.